Welcome in. It is time for another market update here on the Smart Mortgage Show as we are in the middle of the summer. Hopefully you're staying cool wherever you're watching us. I know it's hot where we are, Bill, right now, but how are things in your world?
Things are good. Yeah, things are heating up a little bit and always love the hot summer weather, trying to, get out and enjoy as much outdoor activity as possible and soak it all up.
Yeah, absolutely. Well, we got some things to talk about here in July as we look across the landscape of the mortgage industry, the real estate industry. And I guess, as always, all eyes are on rates. And I think I saw a headline as we were heading into the holiday weekend. Hey, some good news. Rates are ticking down a little bit. So what's the big story on rates right now?
So I would say essentially the story on interest rates is, they were lower in the beginning of the year, as we've noted several times. We're kind of at a 6.5% on a 30-year fixed is roughly the average going interest rate. And, we're kind of at a point where there is some stability. We're kind of stuck in a range, which, of course, we'd like rates to go lower, but we're also grateful that they've not spiked higher.
Yes, and you hear this word "stuck" all the time. We're stuck in this range right now. What does that actually mean for buyers and realtors when they hear that word "stuck"?
Yeah, so right now, I think rates are high enough to stave off inflation. They don't feel like they need to go higher, and but there's also not enough positive news for interest rates to have them go lower. So we're kind of hanging out in a more predictable range of interest rates right now. Of course, everybody wants rates to drop lower as soon as possible, and we're obviously in that camp as well. But we're also trying to recognize, the stability as being a really positive thing if you're going to buy a house right now. So, what is it that we can, point out and be grateful for right now in this market? And that's that rates are at this very moment, they've seemed to have stabilized a little bit in this range and they have not spiked higher, which, by the way, when the most recent inflation numbers came out, that could have been a market reaction that would have certainly been a lot more negative than what we're seeing.
Yeah, that was, I guess, a little bit of good news there. I don't know. People keep asking, when are rates going to come back down? And I think people still kind of have that memory of the early 2020s, and we probably won't get to that point not anytime soon. Who knows if ever, right? There were historically low times. But what's keeping, the rates from falling a little bit more and a little bit quicker right now?
So really the two things, and they're kind of interconnected, but the two main things would be the bond market and specifically the 10-year Treasury. Okay. So the 10-year Treasury definitely largely affects 30-year fixed rate mortgage interest rates. And we've talked about this before, but just a quick reason as to why. If you could purchase a 10-year Treasury, the return on that is almost guaranteed. Well, mortgages, although these mortgage-backed securities are very safe investments, they're not as safe as a 10-year Treasury. So in order to make them attractive to investors, the rate needs to be roughly 1.5%, 2% higher than the 10-year. And if the 10-year goes up, then the 30-year rate needs to go up as well to maintain the attractiveness of that investment vehicle. So the other thing is inflation, and the inflation number. So the Fed wants to maintain over the longer term a 2% inflation rate. We're over 4%. Good news is we feel like that 4% is transitory. It's not super sticky. It's going to flush out. But right now it is over 4%. It's more than double. So until that number gets under control, we feel like interest rates are going to remain higher.
Okay, so a couple of things to keep an eye on there as we move forward. What are you telling people that are coming in to maybe have those kind of initial discussions about home buying and securing a mortgage? But maybe are a little bit hesitant, continue to wait on these lower levels for rates. what kind of conversations are you having? And what would you recommend telling someone that is kind of in that position where they want to wait a little bit?
Ben, this is not something that we believe or something that we're thinking might be the case. We're using, if history is any predictor of future, and sometimes in these financial markets it is, and has been over the last 100 years in our real estate market, is basically if you're timing the market for reasons of the price of the house decreasing, especially in the areas that we work in, that would not be a good idea. So if the payment works now, we do believe rates will come down in the future. You'll refinance into a lower payment. So if you wait for the rates to be lower, the price of the house is likely to be higher, offsetting any decrease in interest rate. But if you buy now at the lower price and refinance later, that's really the best case scenario. So of course, if the rates are too high and the prices are too high and the payment is way out of budget, then it might not be a good time to buy. And we help you through all of that analysis to see if it's makes sense for you to buy. But in most cases, we're seeing that people can afford it. It does make sense to, again, if you're waiting for some other reason, your job might change, you might move out of the area, there's something, bigger that might be a consideration, then by all means, it might not be time. But I think a lot of people are trying to time the market, which it's not about timing the market. It's about time in the market.
Yeah, absolutely. And, again, we're going to have some conversations coming up here on the show. So please subscribe wherever you watch us about, how people are adapting some of these higher rates and maybe some of the myths that are out there that are maybe keeping people on the sidelines a little bit longer than maybe they should, or maybe at least have them be a little more proactive about hunting a little bit more if they knew what these myths look like. But what are experts saying, Bill? I know, nobody knows the future, but, what are the common beliefs about kind of where we're headed with rates?
Well, we have a new Fed chair, Kevin Warsh, who has made it crystal clear that they will do everything they can to bring inflation down, because, inflation can be a country killer. I mean, it of all the pain in the last, all the economic cycles that we've experienced in the last 20 or 30 years, I think most people can agree that the inflationary rates that we experienced through COVID, through the extreme monetary policy, has dramatically increased all goods, and everything's more expensive. And I hear people talking about it all the time. So the Fed is really concerned, and they will do their best. And usually they get their way, that they'll control inflation, which means interest rates will come down. They also want to help stimulate housing with lower interest rates. We are not at the sweet spot of where interest rates are helping housing the way they need to. So timing wise, barring any unforeseen, geopolitical events, that certainly adding that variable completely changes the direction of any analysis we put out there. But I would say that based on what we think and what's being done, and, you could foreseeably see rates closer to 6% by early next year, and, somewhere in the mid to upper fives during 2027, again, barring any substantial extenuating circumstances that impact the, where rates are headed.
All right, very good. Well, rates, to kind of recap, rates sit around average rate about 6.5 for a 30-year. And again, those Treasury yields, inflation still are some of the biggest drivers to keep an eye on here as we move forward. But again, if you're on the sidelines or maybe a little hesitant to buy, or hey, you're just now starting to look and wondering, how do I maybe adjust to these higher rates? We're going to have some more conversations coming up. So please subscribe to the channel there. Every month we do a little market update to kind of bring you up to speed on where things stand, because I know people are getting in and out of the market all the time. So if you are maybe going to be checking it out later on in a month or two, come back, check out our update to kind of see where everything stands. But we appreciate you watching the Smart Mortgage Show. Bill, as always, thanks for your time. Stay cool. We'll talk to you soon.
Thank you so much.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.